Hey guys, it's Willie from Suerte Panda.com. Today, I'm flashing some cash. No, I'm just kidding. Today, I want to talk about using cash as a sort of call option on your portfolio. So, by now, most of you already know that call options can be used in a few different ways. You can use them to speculate, which I think is what most people are using it for right now in the markets. Call option volume, it's way exceeding put option volume. But for the purposes of this video, I'm just gonna concentrate on using cash as a call option. Now, generally, when you're long options, you're making a bet that something's gonna go in your direction. So, for example, if you're buying a call option, you're hoping that the whatever the underlying is goes up, and then for the put option, the underlying goes down. But I'm talking in more of a broader sense in terms of your overall, like, everything in your financial portfolio. So I'm including real estate, diamonds, anything that's valuable, gold, whatever. And the whole reason why people buy call options is it's sort of like a FOMO insurance. For example, if you're afraid that a stock is going to run away from you, to preserve some cash, you would theoretically want to buy a call option, because if, say, there's a stock that you like, it has a lot of growth potential, but at the time maybe it's a little too expensive, like maybe it's gone, like, a few standard deviations up, like past like its moving average or something, and it's like you don't want to buy it at that price, but maybe you want to buy it when it pulls back a little. You don't want to commit all your like a full position. Like, say for example, like maybe you like to allocate like 5% to like a particular like a stock or like something valuable in your portfolio. But at the time, like maybe 5% is like like $5,000, and you don't have that right now. What you could do theoretically, again, this is not financial advice or anything. This is just what I'm, personally doing in my own portfolio. Is that you could probably commit maybe like a fraction of that, like maybe up to, like, say maybe 25 to 50% of like that $5,000, and buy a maybe like a longer term option, so that like just in case that it keeps going up, that at least you have like the call option to sort of like make some profit on, and then maybe like eventually when it pulls back, then you can buy the shares. So you could use it that way. So it's the same thing, but you have using cash. And why would you want to use cash instead of a call option? Well, sometimes, like, at certain points of the year, like like any option is like just so expensive, because like maybe there was like a scare, or like some kind of crash. The recent price action was a little weird in the last few weeks, because you had stocks going down, and I would expect that volatility would go up, but you have this weird thing where like certain stocks were going down, but implied volatility was also going down. So then, like, that's a really horrible situation to be in if you're long certain options. So I thought, like, well, what can I do in this case? In one of my cases, there were a few stocks that were like that, where they were mostly like in the high flying, like, growth, like in tech and biotech and like the future and all this kind of stuff, like the EV stuff. So it's just like a combination of like bad news, and then just like FUD, fear, uncertainty, doubt. But at the same time, like, people are like kind of like, I don't want to sell everything yet, just in case like the market goes up. So I don't know if it's just like selling in preparation for tax time, or if people are buying, maybe putting a down payment on a house, or whatever. So I thought, this is weird. So like, it's not like a really like in March 2020, where it's just like this big day after day, like just like a downpour. Or like the March 2021 was like really frustrating and annoying for me, because like it was more like a chop. It's like one day like the stock will go down like big, and then like the next day, like it'll try to like rally back up, and then it'll go back down, and then it'll rally back up. It's just like that kind of chop. It's really annoying. And at the same time, like the volatility is going down, so like I can't really sell options against it, or I could, but like maybe I want to just like sell like less because like I'm not getting paid for like my efforts. So then I thought, well, I'm just gonna have to like take some hits, like take some losses, and then like take some profits at the same time. One, it frees up some cash, which in a way is like a call option on the future, because now like if you just have cash, you're not losing time value. You might lose some purchasing power because like you don't want to hold cash for too long. Like maybe you want to redeploy it into like a digital asset, or like maybe gold, or something that will preserve value a little bit more. And I think that could be what's happening. People are like, well, maybe I should be thinking about like you're fortunate to have some profits, like maybe maybe buy like a rental property or something, so that like in the future you have like some yield. So that's why like I think having some cash like is handy, because then you can like either redeploy it, like pay down some bills, pay down some debt, if you're fortunate to be debt free, or I mean if you like maybe you had like some student debts, or like some whatever. So yeah, so a cash like in your portfolio is very important, because then this way you don't have to liquidate anything. You just have it ready for like when you have like a downturn, and then you're kind of like, well, maybe it's like it's hitting its like a low of the year, or like maybe like it hit like a Fibonacci level, or like a moving average that you think is like a good support level, and then like maybe either take a swing trade, or maybe like you can kind of average down like your cost basis in a name that you think has like a really bright future. That's the whole point. You want your overall portfolio, not just like in your maybe stocks, but maybe like you have something in mind that you want to like buy. Like for example, like I don't know, I guess people are trying to find like ways to like put the cash to use, and so you're seeing a lot of like crazy stuff, not crazy, but maybe things that people wouldn't consider like maybe years ago. So like I'm seeing a lot of non-fungible tokens, or like now you have digital art, now you have like sneakers, different types of collectibles. So in the future, if you want me to talk about that, I'll be happy to do so, and then like how to play it. And then so yeah, like I hope this was helpful. Just like don't feel bad if like maybe you had to like sell off some positions because maybe you're stopped, or you got stopped out, or maybe you got a little bit scared because like maybe the growth prospects wasn't as good as you hoped. Like when you free up cash, at least it also frees up like a little bit of like mental processing power. Like you could take a step back and say, look, well, I mean, it sucks that like things sold off. Maybe you had to take some losses, or maybe like you had to take less of a profit, and like sometimes like losses are somewhat helpful during tax time, but you don't want to make a habit of it. I would prefer to pay taxes because that means I'm making money, but in order to make that money, you have to have like some assets that you have in mind that you want to buy. And sometimes like options aren't like a good way to play it because like they're kind of like wasting away, and you need some cash to actually buy like any whether regardless of it's like a wasting asset or like a more durable asset. So it's just like something to think about. So if you found it interesting, please consider giving it a like, and subscribe if you wish to. Thank you, and I'll see you in the next video. Bye now.